Good afternoon. Today is December 27, 2017, and I'm Mike Feiner of Feiner Wealth Management and Feiner Financial and Tax. I thought that I'd give you a quick tax update since there have been such sweeping tax changes to our tax code as signed by President Trump last week. One of the most important things that's happened is that the top corporate and individual tax rates have been reduced. For example, the top individual tax rate in 2017 was 39.6%. In 2018, that rate will be 37%. There are also several other graduated tax brackets to include 6 other brackets ranging from 0% to 35%. As a result, you may want to think about deferring any potential income that you have in 2017 into 2018 if you're able. Of course, there are only a few days, but that extra couple of percent can make a big difference. In addition, Congress has eliminated the personal exemption and has changed the overall limitation with regard to standard deductions, basically doubling the standard deduction. So for a great many taxpayers, they will not have to itemize deductions and may be able to file a simplified tax return. The biggest change that I see for individual taxpayers at this point, though, is the elimination of the state and local tax deduction, as well as the real estate tax deduction. Congress has decided to place a $10,000 ceiling on that tax deduction. As a result, taxpayers who have paid these hefty taxes in the past will not be able to deduct them. What can you do now about that? Well, we're recommending that you prepay your state tax liability that relates to 2017 by the end of the year 2017. Normally, you might pay that tax on April 15, 2018, or if you extend, you may pay it after that. So, pay it before December 31st, 2017, which normally means you drop it in the mail and have it postmarked. Or you can send it certified mail to make sure that you do it, or you can drop it off at your town hall, for example, with regard to real estate taxes. This is important because there's probably very little chance that you'll be able to deduct your state and local taxes or your property taxes in 2018, but you may have a chance of doing it in 2017. Unfortunately, Congress did not repeal the alternative minimum tax, so you still may be subject to the alternative minimum tax as it relates to your state and local taxes, but at least if you pay it, it may give you a chance to deduct it going forward. But that's something certainly to take a look at. Congress did retain the medical expense itemized deduction, which is very positive, especially for seniors who tend to have more medical expenses. There have been sweeping changes to corporate tax law. Most importantly for our clients, the reduction in tax rates or the mechanism of adding a 20% deduction for income related to flow-through entities will substantially reduce certain taxes for businesses that this applies to. On the other hand, there are many businesses who are flow-throughs that this will not apply to, but this is a big change in 2018. In addition, there are multiple changes to gift and estate tax law. Most importantly, the estate tax exemption has basically been doubled. This is something we'll go into in a future video taping in 2018. We thought that we would give this quick impromptu update just to encourage everyone to take a look at their state and local tax deductions and their property tax deductions and contact us, or let's take a look at whether it makes sense for you to accelerate those deductions into 2017 instead of 2018. Again, Merry Christmas, Happy Holidays, have a wonderful New Year. Please contact us at 978-740-1011 or contact me directly at michael.feiner@feiner.com so that we can discuss any particular tax matters.